Good afternoon, everybody. How we doing? How's it going? How we living? So, haven't been on in a week because I was deliberating what type of content to bring you guys. Weekly outlooks would get lost in the mix, especially if you're going to review. But I do think weekly options or labeling something as saying, hey, the market could go this way or the other way. This is just a clarification of lines that you're looking for. That would be more clairvoyant than trying to discern major directional biases for everybody throughout the week. Here's another thing. Institutions watch YouTube. So at some point, I can give everyone as much as possible simultaneously. We have to be smart on how we convey the information. But today is backtesting 101. For those of you who know how to do it, for those of you who don't know how to do it, we're all here for it. You're going to be here for one of my backtesting sessions. That's the best part. We got 2 hours on the clock. Obviously, this video probably won't be 2 hours. I'll cut it down. But I do this for myself pretty regularly. Backtesting is one of the most fundamentally important things that you can do as a trader. And the way that everyone should look at backtesting is the way that athletes look at shooting, let's say basketball player, and a basketball player looks at shooting free throws as practice, shooting threes as practice, repetition. Hockey players shooting from all different angles of the rink, all different to make sure that they understand every single angle on their opponent's side of the rink that they could possibly get the puck in the net. Same with soccer players. Any sport you want to break it down to, repetition is oxygen. We want to make practice harder on ourselves than the real game. Because if practice is more difficult, then that will make sure that the real game feels easy, right? Practice hard, practice how you play as well. So with that being said, we're going to get into it. Today we're doing GBP AUD, just a pair that I have been trading pretty heavily over Asian session, just based on, for some reason with sleep patterns, New York is not flowing too well, even though New York has been an incredible session for me in the past. So we're going to get rid of this. We're going to come down here. Let's see. Google Chrome. What do we have on Chrome? Oh, yeah. I got the whole YouTube going on. Got tattoos, Instagram, software development, animal safari. I'll probably put that over. But in this case, we're going to go trade, FX replay. So I'm doing a $200,000 account right now on FX replay because we are in the middle of two $200,000 challenges, and we have acquired one funded account, one $200,000 funded account. So I'll go ahead and play this session. So one thing that's really important with backtesting that people tend to do is, or at least I think, they don't start fresh. You need to start every week fresh for the most part. There's some lines that should be left on maybe from a couple weeks ago. You're not going to lose those lines when you start fresh. You're not going to forget where those lines were unless you're new. And if you're new, then you really should just be sitting back and looking at the responses from certain levels that we're going to go over today. The prerogative behind backtesting is really to get a familiarity with your preference of trading. How do you want to trade? Do you want to be short-term? Do you want to be long-term? Are you going for larger moves, shorter moves? What is the time session that you're trading? Everything plays into account when we are backtesting. So backtesting is still... Let's see if I can go over here. Okay. Backtesting must be treated as real as possible. So the web application that I pulled up here is FX Replay. There's also another application for MT4. I can't remember it off the top of my head. But what these where these replay functionalities separate themselves from the crowd is that when you press play, they will print as the candles printed in real time. So if you're trying to emulate the game as much as possible, you want to make sure to be backtesting on a software that emulates how the candle prints, not just shows up like it does on TradingView that so many people are used to, right? It's just a whole bunch of hunkaballoo. All right, so we're going to go to the daily here on GA. First and foremost, I do look at the daily. You could look at the monthly if you want. I'm not biggest monthly guy. Been downtrending for 1, 2, 3, 4, 5, 6, going on 6 months straight downtrend. Wow, that would have been nice to catch. That would have been a sweet and sour sauce move right there. Okay, so monthly levels of importance. You guys got to know when structure is broken. This is just how my brain works. This is how my brain functions. If you rock with it, cool. And if you don't, go away. All right, so break of structure. Son of a biscuit. That's going to be an issue, this little thing for my bars. But I can add that. I'll add that over here. This is a monthly break of structure, right? One thing that I look for a lot is something that we refer to as exhaustion zones. Exhaustion zones are where the market broke structure and took its final breath before going lower. That's what I call a wick exhaustion zone. This is obviously on the monthly chart, okay? But what's crazy about this is, let me do a couple things. Let me pull up here. I'm going to favorite my fib. I got to favorite my trend line, favorite my arrow. I feel like such a slut right now. I'm using my friend's FX replay because I have not. Yeah. So you can take the 50% of that, and that would have been an unbelievable monthly execution after the break of structure below your exhaustion wick range. It's on a monthly chart, guys. We haven't even gotten down to a daily. So welcome to the sauce, okay? Welcome to the frickin' sauce. And by the way, I am not going to make this video 2 hours long. I'm going to make this very short, very concise, and show you kind of where my brain goes when I backtest. May not even execute. That's the in and out theory. What we're talking about here is just market translation. How do we translate the market as we're going in when it is on a blank slate? So obviously we have pushed down. Obviously, we have created a level as a monthly level that has been a decision range, and price without question decided where she wants to go for the most part in the time being right now. So now we go down to the daily. Okay, cool. So now at the daily, when we think about the daily, right, and we think about the direction of price, one of the most important things to ask is liquidity zones, okay? Liquidity points, and I have to favorite my text button too. Okay. You're looking on your higher time frame draw on money, on other people's money, okay? If you're looking for your higher time frame draw on other people's money, you can look at it a couple ways, right? So that used to be a draw on liquidity that price took out, okay? See how intensely price spiked through what happened to be this perfectly diagonal buildup of retail liquidity or hedge fund liquidity? Not only did it inch down, spiking through activated buy orders, bringing the market back up, and the institutions brought it right back down, retested one more time, just as a nice little fuck you, and then continued to drop it. Awesome. So now we have a conversation. Now we have to ask ourselves, where liquidity stopped, right? No, it's not where liquidity stopped. Because you do have in a visual representation liquidity. I kind of like the salmony color, maybe a light purple. liquidity can exist. Where the fuck? It's like too big, too small. All right, there we go. Liquidity can exist not only intricately on a smaller time frame chart, but it absolutely is a prerogative to consider on higher time frames. It's way too big. I'm gonna make this a daily. That is a daily fair value gap. Okay. Ooh, yeah. Okay, so within this daily, we have here. Okay. So, liquidity resting that has not been taken out, a region of imbalance. That's just when the market impulses and doesn't wick back in to fill itself, even though in this moment in time it was clean and clear, right? Now, another question I want to ask is, when we made this impulse, did we break structure? Yes. Okay. When we made that impulse, we broke structure. Okay. Now, with such a strong structure break, what did it rest on? Okay, what do we rest on? Boom, boom. That's where we took a breath before it sent down, only to go higher. I know this is going to be confusing to a lot of people, but essentially think of it like this. Essentially think of it like you have a massive, massive push up, right? Massive push up, breaking all internal structure, and we took a breath. Ironically, that's where we checked back in. Massive, massive, massive push up, and then we came back down, we took a breath, right here. Boom. Cool. These two zones are super important for me leading into this next session, knowing that they're daily zones. One's going to be a daily fair value gap, which I'll just use as a nice little purple, which I'll just use as maybe a little darker of a purple. And then this one, God, I hate orange as a fucking color. So maybe this one can be a darker purple. Yeah, okay, lighter purple, darker purple, nice. Dailies with liquidity, with priority, and we're not even around price right now. So we're speaking more so from a perspective of, hey, what is the market, what is the rest of the market up to, right? Boom, boom. You know what's funny? Check this out. So we broke structure to the downside over here. Okay, broke structure to the downside over here. Price took a breath. Now, how funny is it that that same breath is also the breath of the fair value gap? So one thing that I'll notate is right underneath, because I would be drawing a horizontal box, boom, boom, but I like the fair value. However, I'm a slut. Haha. Okay. If everyone nowadays in trading is talking about fair value gaps, order blocks, and all of this region, do you guys really think that that's still going to be that's still going to be the point of emphasis in the market? That was big in 2017. They railed it in 2017. What is going to be required of you in the market right now is to take a step deeper, is to take a look deeper. Okay? I took easily 3 or 4 months off of trading, came back into the market, and passively, based on all of my years of experience, you don't understand, when you take time off of the market, your brain actually fuses together. It almost allows all of that information that you just processed to heal. It's like muscles tearing and tearing and tearing and ripping, and you're losing, and you're confused, or you're pushing and you're pushing, and then you take a step away. Well, imagine the neurosynaptic kind of layers in my brain coming back together. That's what happened with what I'm expressing to you. As the thought process is saying, hey, these fair value gaps, hey, these order blocks, hey, all of this. Yeah, that's important. But everyone already fucking knows about it. So you have to take it a level deeper. In my personal opinion, when a break of structure ensues and then you have a breath, right? The top of the breath line, It becomes one of the most pivotal places within the entire market. I could even draw it that way. Look, break, retest, gone. Anyway, it becomes one of the most pivotal zones in the market. So I don't need to necessarily know what's going to happen here. I think we could very well turn around here, right? But everyone's looking for this fair value gap. Everyone knows. So right now, daily on GA, bullish. So let's go 4 hour. And let's go a little bit closer to price too. Okay. Ha, psych. All right. Boom, boom. We got boom, boom. Wait. No breaks, no breaks, no breaks. 4 hours gonna go in green. As you already saw, hey, why? Break down, breath. Test, see ya. Right? You could even say, hey, Alex, it's not that breath, it's this breath. Okay, cool. Whatever makes you more comfortable, closest to price, because ironically, that's the same level that we tapped into, tested, and fucking flew. Alright? Alright. I'm still learning how to teach fluidly and articulately, so thank you for your patience, guys. But how funny is it that all of a sudden we tested, there was a trade, broke down, retested, broke down again, retested. Now it looks like we have commitment. And it's Thursday. So, in my personal opinion, I'm a Sunday guy. Boom. See what happens. Oh yeah. Making everybody think that it took that fair value. By the way, I only execute trades on the 30-minute time frame, so now you're just kind of seeing a broader scope of just the market respect and almost interact with these zones. Oh. Do we break? No, break. Yes, we did. Break. Yeah, that's why that level's important. Broke. Okay, so assuming, yeah, this range is kind of important, but that's going to be specified on the 30-minute. If we don't just keep pushing down, I'll do a 30-minute time frame. Oh, wow. Interesting. Okay. Look at this print. Was that an AM session? Oh, bro, perfect. That was an Asian session. Money. Yeah. Building. They still could push up, but they're building liquidity, and they have to take this zone. Will they take it end of week? We don't know. But I bet your ass something. That's a trade on Monday. Oh, there's a tap. There's a response. How wild is that, guys? That's from an exhaustion wick from April 14th. Actually, no. May 30th, 2014. And we're in 2016 right now. So prevalent, I would say. Oh, yeah. Oh, wow. Okay. So that's how we ended our week? Or is that 17? Oh, wow. Okay, we came out the gate ripping. Just how to end the week. Boom. And now we start. Okay. All I'm going to do, and I realize it's 19 minutes, so I'm not going to take too much of your time, because I already gave you one little splice of gold that if you applied not only on the daily but the 4 hour, the 30 minute, the 4 hour, the 2 hour, the 30 minute. Those are keys, right? Absolute keys. So time to scale in, because now we have our 4 hour ranges. Okay. Now we're playing. Now we're playing. Beautiful. 1 hour. So Sunday, immediate buy up. Okay. Might want to let this breathe overnight and see where we're at in the AM. We're 7 a.m. Boom. Yeah, let's let this breathe overnight. Nothing much I'm seeing or wanting to do with it. Alrighty. Cool. Now we're at 7 a.m. Now what do we have? We're going to go down to 1 minute. We're going to go over here. We are going to acknowledge that we have a nice liquidity line right there. We're going to acknowledge that we have a dual fair value gap for whatever fucking reason right there. That's maybe light blue. Yeah, fair value. Okay, boom, break above, breath. I'm more concerned with this than I am with any of this. Because, why? If this will get tapped, right? This will get tapped. So you could take a short-term buy from here to here. After structure broke, we did two things. Structure broke, we took a breath, okay? Number one. Structure broke down, right? After structure broke to the upside, boom, breath. So it's kind of flipped, right? So it breaks and then breathes. But then this also is a break and then a breath. So you have two contingency zones to play in. Ironically, what did this zone drop off at that fell heavily? An exhaustion wick. Exhaustion wicks are the wall, right? So, that being said, you're not hardcore. I don't know if any of you guys have seen School of Rock, but School of Rock's fucking iconic. Okay, so that's a 30-minute. Let's go ahead and let's get down to the nits and the grits. Boom, 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 boom. Oh yeah, baby. All right, boom. That's an exhaustion wall. So we see how it pushes up, up, fires back down. What does it also complement? Well, it also complements this. So it's both here and here. Okay? That's a double up. Break above again, down here. We already know there's liquidity. But for cleanness sake, I'll just draw it from right here, and we'll make it dotted. Okay, break above. What do we do? Landed. This is where we landed. Okay. I don't even know what happened to price to the right of this. I don't need to know. I just need to understand what levels we're playing with. Okay. All right. 7 a.m. 7. All right. Let's play this. We're going up. There's no ifs, ands, or buts. I don't know who's going to try and short this. I don't know how they're going to try and short it. It could fall. There's no question. But in my personal opinion, that's another range to take into importance right here. yeah, that's we go below here, we'll roll back down. But for right now, for today's session, let's just see. I'll just take one trade off of this. And then I'm going to go back to back testing, but I'll close this video out just because what I've shown y'all is by far enough for today. And it's been brief and it's been vague, but if you can put 2 and 2 together, it's enough. What am I doing? Boom, boom, boom. Honestly, I'll just throw a long position on right here. 70 pips. Stop loss. Stop loss below this low. 40, 1 to 1. We'll do a place order. All right. No, we'll buy market on that. Okay. Closers are really important, and we might get faked out and closed down here. I'm not necessarily too worried about that, but one thing to understand is price attraction and the momentum of price. All price wants to do is trap. Is trap, 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 trap. So our first partial would be right there at that most recent high. We're still coming out of 7:30. Now we're at 8. Now it's at game time. I could totally see it ripping down here, faking down just to go up later on in the week. Right? But momentum wise, I'm going to go with a path of least resistance here and just continue to trade what I know to be true and what I know to be important and what I know to be super legitimate. Okay, getting there, boom. Pause this. I can go here. I'm going to take 50% off of my position. Cool. And I'm just going to keep going because that was a sweep. I can move my stop back above here. And knowing that my final TP is about to get hit because of the zone that it actually is. Just give it a second. Ba-boom, ba-boom, ba-boom. One more second. Come on, shorty. She's shy. She probably isn't going to want to tap into it immediately, but they will. Situation like this, you have an option of closing out your position because they just didn't want to fill. It's very rare that you see them not fill. This is now New York open pretty much. So that's why we're seeing such intensive spikes. And I am curious what would happen if I just let this ride. Obviously that's my position. I'm going to take off the majority, but I'm going to let the rest ride for the morning. So I'll take off another 25% maybe at my TP and then just see what happens, because that could be the reversal range for the day. 9:30. I don't like being in trades longer than probably 2 hours. All right, so see that break above and then that respect, boom. It's going to respect it, dude. It's really simple. But you got to have faith in what you know. For me, see, that even conversation of oh my God, let me see if it can extend for the morning. That's just a greedy conversation that I would be having with myself, because that's already 66 pips for the morning. So yeah, I'm going to TP that. This is going to TP and I'm out. And if this breaks above retest, then that could fly even further. But that's just a quick example on essentially the value of these ranges and how effective they can continue to be in the overall schematic of your trading. So thank you for joining. Dr. Pip. In and out, baby. Backtesting 101. We're going to do these regularly. I'm still learning on how to teach you guys. So a lot of good stuff. A lot of good stuff covered, but a lot of good stuff to come. Peace. Oh, and everything's an experiment. Always.